Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to have a look at a lovely Holy Grail trade setup on the 15-minute ES. But before we get to that, as usual, let's have a look at our risk disclaimer. Just remind you that all examples in these videos should be considered as hypothetical. No trades were actually taken. They're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. We'll be looking at a losing trade later in the the video as well. Or put another way, all professional traders know and understand, and more importantly accept, that losses can and will and do occur. All trade decisions are your own sole responsibility. Right, let's have a look at the chart. The chart I want to look at is a 15-minute ES on a 24-hour session, and I want to have a look at this particular buy setup here, this TS1 HG or Holy Grail trade setup here. For you guys who've been following MTPredictor for a while will know that the first thing we do is move to the higher time frame chart to look for areas of support and resistance. We do this because we understand that markets go in cycles and we only want to be looking at the market when the picture's clear. So for this we go to the higher time frame. The higher time frame is the next logical time frame up from the one you are trading. In this case, if you're trading a 15-minute, you'd probably want to go to the hourly chart. You tend to look for a chart with a time frame between 3 and 5 time frames higher. So for example, if you're say trading a 3-minute chart, it would be the 15-minute. If you're say trading a daily chart, it would be the weekly chart. Right, now what do? Well, we will look for areas of support and resistance using our DP or decision point tool. Now I want to take training mode back, or use our training mode to take the chart back to a little bit further in the past, just to show you where to place these DPs on, because this is important, particularly when you have a market like the ES, which was chopping sideways here. We basically want to use either the last swing into the high or low, or the last important or significant pivot. So when you get a market that's chopping sideways like this, all these pivot lows in here are not really significant, because the last major low, can you see it, is this one here. It's the one I'm circling. So you wouldn't really want to use these pivots in here because you're just in a trading range, so to speak. So you'd go back to this last major low, because this is the lowest low here. Can you see that? That's the lowest low. You should right mouse click, put DP on, and can you see how that would give a support zone? But more importantly, it's a support zone on the chart in advance. In other words, it's there before the market even gets there. If I now move forward, can you see how the market now has gone down into that level? This is when the pattern becomes clear, because on this higher time frame chart we now get basic support coming in at our higher time frame DP. I'll just turn trading mode off, and as you can see, that nailed the low beautifully. But let's go back on our time frame we were looking at, which is the 15-minute chart. This is where it becomes important, because can you see how this low here came in beautifully at the 60-minute low? In other words, it came in at the higher time frame support. So what's a Holy Grail trade setup? Well, it uses my unique isolation approach to Elliott wave, where rather than trying to use Elliott wave on the chart 100% of the time, we start at a logical sequence and look at the Elliott wave patterns in isolation. So in other words, here is where the market started to find support. So this was a logical place to start our sequence. We then look for a Holy Grail trade setup, an initial move off that. In Elliott wave terms, this would be wave 1. An initial correction down here, which in Elliott wave terms would be a wave 2. If I just put the major pivots on here, I'll just show you how this would have looked at the time. So here we have an initial swing up on the major pivots, an initial swing down. If I right mouse click here and do Elliott wave major, you can see that basically what we're looking for is a wave 2 correction. So we start the sequence at the next higher time frame DP. Initial move up wave 1, initial move down wave 2. We're then looking for a strong wave 3 swing, and you can see that's what unfolded. If I right mouse click up here and do Elliott wave major again, you can see that's what the market did. It went up to wave 1, down to wave 2, up to wave 3, with the high pretty much at the typical wave 3 WPT. If I clear all that lot off, ideally what we're looking for is the wave 2 to subdivide into a minor ABC. So if I do Elliott wave minor, you can see that's what it did. Can you see that? A, B, C. This is our Holy Grail trade setup. So why do we like this? Well, if I place the analysis on the blue buy bar, you can see there it is there, a couple of bars after the low. There's the blue buy bar. So I'll right mouse click over that, to analysis. Again, you can see that the target we're looking to go to is the typical wave 3 WPT, which is what we're anticipating in a Holy Grail trade setup, because we're anticipating this is a wave 2, therefore we're looking for a wave 3 swing. And the beauty of this trade setup, and it's why I've nicknamed it the Holy Grail, is not because it has a high percentage of profits. It's because when the profits come through, the profits are large in relation to the initial risk. Here we use correct position sizing, in this case risking less than 2% of a sample $20,000 account. That will mean at this entry level with initial stop level here we'll be going long 2 contracts. But the beauty of this trade setup is because the wave 3 is typically the strongest and longest swing in a completed 5-wave sequence, the profits are typically large in relation to the initial risk. You can see here the profit would have been approximately 6.8R or 6.8 times greater than the initial risk. You can see the typical wave 3 WPT nailed that high very nicely as well, so it's a very, very good trade indeed. So that was a great example of a Holy Grail trade setup. I'll just clear this lot off, and I'll just go back to the 60-minute chart because I just want to show you where the next logical place for a target would be. Again, we're looking at the last major, rather looking at the last swing into a high or low, which would be this last swing down here, or we go to the next major high. As you can see, it would have been this pivot here. So I'll right mouse click, do DP. Again, that would be the logical target for this rally on this higher time frame chart. Remember, that would have been on the chart in advance before the market even got there. So just after this low came in, if I go back to around about here, which is where our 15-minute Holy Grail trade setup came in, this would be our next major resistance, all the way up there. If I turn training mode off, you can see that's where the market went to. And if I go back down to our 15-minute chart, you can see that came in on the high there as well. So that gave you added confidence in your Holy Grail trade setup here, because the market was in the direction, or the setup was in the direction of the large degree trend on the higher time frame chart. So a very good example of our Holy Grail trade setup on our 15-minute ES. Do all trade setups work out this well? Of course they don't. This is why we have position sizing, so when the losses come through, the losses will be kept small and under control. If I go down to the YM chart, we had a similar kind of setup. There was our 60-minute or higher time frame low coming in there. Here's our initial move up. Here was our initial correction down. But can you see we actually had a TS1 buy setup a bit earlier. So if I right mouse click, do analysis, this would have been actually a losing trade. But because we use position sizing, this loss would have been kept small at what we call 1 risk unit or 1R. So when the next trade came through, which would have been off here, that would have gone up to the typical wave 3 WPT, which would be slightly lower than it was on the ES. Here the profit would have been 3.2R. So even though this particular trade setup is not quite as good as the one on the ES, the profit here would have been 3 times greater than the loss. So that's why we use position sizing. So when the losing trades come through, and there are losing trades, every professional trader knows and understands that losses can and will and do unfold. The losses are kept small in relation to the profits. For you guys who've got eagle eyes, will notice there was a history triangle here, so there was actually another potential trade setup right at that low there, which was a VS or volume spike setup, which is what I don't want to talk about in today's video. That's a topic for another day, but that caught the low nicely. You can see some other buy setups here, but of course we hadn't got down to the support level, so the more experienced trader would have ignored those, even though our MTP trend was blue at the time. That's even more obvious when we look at the ES the S chart. You can see there were other buy setups on the way down here with our MTP trend blue. This is why, as a more experienced MTPredictor user, we don't suggest you blindly trade MTPredictor as a black box system where you just look at our MTP trend color, red for down, black for in the period of a change, and blue for up. You don't just follow this mechanically. It's much, much better to look at this in the way I've described in this video, is that you go out to the higher time frame chart, you then place your DPs on the chart from the last logical or important pivot highs or lows. Now I've put the major swings on there, that's even more obvious. So you would have used this pivot low here, and as you can see, that gave us our DP support that nailed the low. So as the market was coming down into this bit, the large degree trend would have still been down. In other words, the picture wouldn't have been quite so clear. So this is why I suggest that you should look at the larger degree time frame chart for your support and resistance zones, and not just follow MTPredictor blindly as a black box system. When you do understand what you're doing and actually can apply this well and can use the higher time frame support and resistance, you can get some lovely trade setups like this one here. As you can see, this would have actually caught the low beautifully with our larger degree DP. Initial move up, initial correction down that unfolds into an ABC, a perfect wave 2 low. The target is then the typical wave 3 WPT, which goes all the way up to there, which caught the high nicely, and the result was a lovely profit of 6.8 R, or 6.8 times greater than initial risk. This was a perfect example of the MTPredictor Holy Grail trade setup that's literally just been unfolding on the 15-minute ES.